All right, morning everyone. Let's kick it off here. All right. Last night's session, we tried to creep back up toward flat line on the S&P, on the Nasdaq, and then really there in the last 2 hours things got real heavy. I mean, we got down about 1% or close to 1% down on the day at one point during the S&P session. Same in Nasdaq. We crept up a touch off the lows into the close, but not a whole lot. We had obviously we had a big day out of Apple and the big releases of the iPhone and the iWatch and iPay and all that stuff, and then we had McDonald's, which came out with shocking sales numbers because everybody's gotten on a health kick in the States. But other than that, not a whole hell of a lot going on to really drive markets. I think markets were kind of paying attention more to the news of the Scottish poll showing that 51% or so, I shouldn't say 51%, the majority of the people that have decided on which way they're going to vote are saying they're going to vote for independence. And I think spooky markets a little bit, starting to get markets a little bit nervous about what's going to happen going forward. Also had some big calls out of people like Mark Carney coming out and saying that they thought that the BOE would raise by as early as spring. So I think those are some really important things that maybe drove markets a little bit on the day yesterday. If you look at Asia, you can see we're obviously a little bit of follow through to the downside, the only outlier being the Nikkei. Obviously on the weaker yen, the yen just continues to kind of weaken on a daily basis at the moment. It really feels very shaky right now. But we had the Hang Seng and the Shanghai are down reasonably. Australian market also fell over 0.5%. So we had Chinese money supply numbers today, which I think were the biggest things that were out, and we continue to see the same sort of thing going on there, even though they've loosened some of the measures there, and they've tried to get things going again. They're really trying to get to that 7.5% target of growth. You can see the money supply numbers coming in at 12.8. Really is just probably not going to cut the mustard for them to be able to get to that sort of target. So expectations at 13.5. You saw real estate developers again getting hammered. We saw mining stocks off again in Australia, really painting a real negative picture. I think out of China in particular, and also from just the fact that these iron ore miners are so soft, it's not painting a great global picture either at the moment. So a little bit of nervousness rising up on the back of that. All right, if we look at the chart of the day this morning, this kind of follows through on exactly what we were just talking about, and we've been, you got the guys out there that are preaching inflation. We're going to get this massive inflation or whatever. The commodity markets are absolutely screaming to us that is not going to happen, and so are the bond markets at the moment. So just keep that in mind. The markets always, should know, and you can see this here. I mean, this is a raw commodity index. I mean, look at this. This is just since April. I mean, this is an absolute beating. The entire commodity basket's fallen by over 12%. So that's a real sell-off there, and that really is I think kind of the best gauge that you can looking at that and looking at bond yields. I know a lot of people are saying, bond yields are artificially low because of the bond buying from the central banks, but bond buying from central banks are going to wind down in October from the U.S. and they're still freaking low. So it's interesting to note. We did have Jeff Goodlock, the kind of bond god out there, that came out yesterday and said he's expecting yields to start to rise now on U.S. Treasury. So that was quite interesting. Maybe also got people a little bit nervous. But anyway. Corporate action this morning, we had MMI came out, headline earnings per share at $2.04. That was a touch better than the recent guidance. The guidance was lower than Bloomberg consensus from before, but the guidance, but this number definitely a little bit better than guidance. Divi per share coming dead in line. They did issue a special div of 50 cents, so it'll be interesting to watch MMI trade this morning. We also had RMB numbers look really solid out of there. This doesn't have we don't have their guidance up there, but still looking very solid. 4 4.54 divvy per share, 127. Expectation was for 98 cents. So looking very good out of RMB. And then we've got Aspen as well. That's coming out today. Headline earnings per share expectation at 10.81. Revenue expected at 29.86 billion. Divvy per share expected at $2. So keep that in mind. We also had Impala Platinum, which was raised to neutral versus sell at Goldman today. So Goldman actually has been the one that's been all over this this commodity coal. They've been calling for lower commodity prices, and they've been downgrading targets on most of the stocks for quite some times. With a lot of the other guys upgrading them and being on the other side of the fence, Goldman seeming to be the winner again there. So, like I said, because it's obviously Goldman, even though it's only an upgrade to neutral, probably going to mean more than the other brokers. All right, this morning we had Japanese PPI numbers year on year, a little bit softer, machine orders a little bit better. Later we've got French industrial production and manufacturing production. Then we've got Spanish industrial output and mortgage apps later in the States. So absolutely nothing in terms of the market data that's probably going to get markets moving today. We're going to have to follow the action and follow the the leading indicators. We talked about it yesterday, and we kind of made a post onto our Storm Live page on our prop website, and there's some interesting things that are starting to unravel in markets, and we've seen after we've seen just incredibly light volatility across every asset classes. We're talking currencies, we're talking bonds, we're talking commodities, everything, even and equities as well. Obviously, the just no volatility, no real movement anywhere. Everything was kind of adrift if we did get anything, and we're staying in really tight bands, especially in the FX markets and in some of the bond markets and things like that. And the last 2 or 3 weeks, we have had some enormous moves that have happened. We've had enormous moves. Look at the Japanese yen. We were trading around 101. We're at 106.50 in about 2 or 3 weeks. Look at the oil price. We're at $108. We're at $92 now. Look at iron ore. Iron ore has been hammered by 15%. Look at European yields, which have absolutely fallen through the floor. So we've started to get a real movement in all of these different asset classes. That's going to start to create some real volatility for us in the equity markets and indexes, obviously. And it's going to, like we said yesterday, volatility begets volatility, and we're going to start to see a real creation of what I think is going to be more persistent volatility over the next short term. So just keep that in mind. That's going to be real interesting. All right. Obviously, the theme of yesterday, we had the rand, which really blew out. We talked about it in the morning when we showed this chart, and we showed it kind of popping up through. We did show it on a horizontal basis. You could draw this different ways. We talked about it just getting up through 1080 being significant, and a quick move to 11. We almost got there yesterday on its own, but definitely looking like we're going to go to 11 in the short term, maybe even a little bit worse. Obviously, that weakness in the rand really bolstered some of our dual listeds, but really put pressure on our the interest rate sensitive stocks, more the retailers and the banks and things like that. So just keep that in mind, that we may have a second day play in that sort of strategy today. If you look at Standard Bank here, you can see we kind of were putting in a floor here around 138 on a closing basis. Yesterday we managed to get through that and get through it nicely. 136.50, you can see there. So we kind of taking out lows on the close there. I think we need to see it close below 136 to just give us a complete blowout all the way down to support, which I think, let me back out here to a little bit longer term. No, let me actually even go to I'm going to go all the way back to 10-year, yeah. Potentially all the way down to the 120 level, but in the short term, we're going to look down probably at least to where we broke out from, which is around 130. So I think that's definitely potentially in the cards on Standard Bank, especially if we can see a little second day play here out of with the rand weakening. If we pop up through 11, I wouldn't be surprised to see that at all. If we look at Goldfields here, we're going to look at the U.S. listing of Goldfields. Yesterday we had a real reversal that I noticed in the end of the U.S. session in the gold stocks. And so this little level here, this is in U.S. dollars. Remember, at 4 Rand 32, call it 4 Rand 33, something like that, 4 Rand 35 even. We had a real reversal off of this support level, and we had a reversal in all the gold shares there. And that came actually as the gold price was making its lows at about 1249 or 1250, somewhere in there. So there's definitely some support in spot gold at 1250, if I'm not mistaken. Let me just have a quick look here. I didn't even look at it this morning, but I think it's kind of close to where we sort of bottomed before. Actually bottomed a little bit lower than that, about 1243. But either way, we did start to make a bit of a reversal there in all the gold shares late in the afternoon. I thought it was really interesting. If you look at Anglo Gold in the States, you'll also see the same thing. You can see right as we came here into major support, we also made a nice little reversal there, nice green candle. So we're going to be looking for that chart to be holding support at about 1540 in the States. So watch those over the next couple sessions. They've really been hit hard. Obviously, the gold prices have been off. I think the lack of any inflation across the board has really just decimated the gold price of recent. So maybe a little bit of a shorter term bounce in it. Obviously, Goldman coming in today as well, upgrading. Impalas, I think some of these things might be full for the short term to the downside. And the last one we'll have a look at here quickly is just Bidvest. This thing continues to fight here up close to the 300 level. Actually held on real well into the close to close up closer to 99, but potentially failing this 300 level. We're going to need to see it kind of break down. I think especially if it can get below 295, where all that little consolidation's been there, we might be able to see this thing pull back to the 280 level. And that's it for today, guys. Good luck out there.